there is news that Nikhil Kamath has a lot of his money in actual physical gold in the Middle East.
You realize that Bitcoin's scarcity will be like 32x, right? Compared to gold. US knows this. So US owns 8,000 tons of gold, but India owns 30,000 tons of gold. China owns 30,000 tons of gold. Would US let India become 3 times richer than US? In any case, India is getting richer. In this whole scenario, India is getting richer, right? It's a great scenario for India because even last year, Indian households have added now $1 trillion of wealth. US wants dollar not to be the reserve currency, but it still wants dollar to be the dominant currency.
And there's a lot of noise around the fact that China maybe have instigated Pakistan in, leading that attack.
If Indian startups are doing IPOs very successfully, very small part of that is, India, 99% of is US. I think Swiggy's cost structure is still bloated, particularly the overhead. Swiggy has a lot of people, a lot of overhead. Deepinder once said this very interesting line to me, saying, revenue comes from service, but profitability comes from brand. Fundamentals don't matter, technicals don't matter. The only thing that matters is...
Hi everyone, welcome to a brand new episode of Asymmetric. This is episode 27 and we have a very, very special guest today. Deepak Garg is the founder of AnywhereJobs, also the founder of Satoshi Wealth, was earlier the founder of Rivigo, has come on the barbershop before, and today he's joining us to discuss a myriad number of topics. If you ever follow him on LinkedIn, I must say, first of all, that reading a Deepak Garg LinkedIn post is a exercise in intellect itself, because uske baad you feel stupider rather than smarter for some time, and then you have to go and do a few Google searches, and then you can kind of get back to. But I have the privilege of WhatsApping Deepak and asking what he actually meant. But today we have him to discuss his views on a lot of topics, especially his interest in crypto, what is happening in the crypto world and the ecosystem, what his new companies are doing, and then of course we are going to go deeper in the food delivery quick commerce results that were announced last week with Swiggy, and some of the analysis on that, and of course all other top of mind how to build a startup in India kind of tricks that Deepak has up his sleeves, along with a lot of, every time I meet him I have to take notes of all the takiya kalams that he has. So this episode will be full of them and I hope that you enjoy. Deepak, welcome to Asymmetric, and thank you for taking the time.
Thank you, Shantanu and Revant, for having me here. I've really enjoyed our past conversation, so look forward to this one as well. And lots going on in the world, so there's a lot to talk about. Thank you for having me here.
Amazing. We also miss our usual partner in crime, Chirag. He's unwell today, unfortunately. So there might be a little under indexation of charts, but I think Revant will compensate with his brilliant analysis of Zomato and Swiggy and that amazing Excel that you can see in the description. So enjoy the episode. And as always, please leave us feedback. All the comments mean so much. A lot of the comments, in fact, were requesting Deepak for the first 26 episodes, and we have kind of complied with getting him. But please give in feedback, good, bad, ugly, as honest and authentic as possible. We're all ears. Thank you so much and hope you enjoyed the episode.
Both your ventures effectively are India to global, so
Yeah.
Actually-
So AnywhereJobs takes me to Europe quite often. In fact, last week also I was traveling. So that triggered it. And then I run this fund now called Satoshi Wealth. It will be crypto, and it's a Bitcoin alpha fund. So that's also largely, outside of India. So
and crypto ke liye to actually Dubai is a great place as well. At least the adoption and awareness, understanding investor base.
Yeah. I don't do like broader crypto, but this is a new category of funds called Bitcoin alpha funds. So there's so many new instruments coming in Bitcoin itself. There's this whole range of companies called as Bitcoin Treasury companies. I think at the last count there are hundreds, or someone said there's 700 basically, right? Hundreds of them. SoftBank just launched one last month. MicroStrategy is the father of all of these companies, right? And now almost every week, a few companies are getting launched.
Wow.
Okay, in this space. So it's a new theme. I think it'll continue probably for the next 5, 7, 8 years. A lot of aggressive plays are happening in that. So people who are and on those so they're listed companies. The way this works is only when if you're a listed company. So most people are doing mergers or whatever to get listed and then or buy out a listed company and then reverse merger, right? And then there are a lot of these products which come on top of it. We have fixed income products, perpetual options, lots of crazy stuff is happening in this market. Like there are almost 7 or 8 financial products on this Bitcoin Treasury company itself. Ab tum dekho, there are more than hundreds of these, and there are 7 or 8 financial products for each. So you imagine the instruments you can trade are like few thousands.
Wow.
And these are like crazy leverage instruments. So if you can get a handle on Bitcoin right through some measures, then you can trade well.
So your fund is effectively trading these instruments?
Yes.
Or buying? Okay.
Trading, all leverage trades.
Love the name, DG.
Yeah, it's a very interesting thing. I was sitting last year and it was still a bear market, Bitcoin bear market. And I thought, this market is going to be, I'd done my work. I was doing my work for the last few years. So I'd spent a few thousand hours on this topic. So then I thought, this is going to be $100 trillion market. So kuch to hoga, it's going to be such a large market. It's a 2-3. At that time, I think it was less than a 2 trillion. Now I think it's probably close to 3.5, 4 trillion as a market. So I thought, this market is going to go 100x in 10 years. Something's going to happen. तो मेरे को लगा कुछ तो करेंगे कभी ना कभी. So I got this name registered. At that point in time, it came expensive, by the way. Now it is not. The Satoshi Wealth, domain name came. I had to pay a lot.
How much you had to pay?
Yeah, I had to pay 30 lakhs. So कितना हो गया?
Wow, really?
Wow. So
Yeah, but it'll be much higher right now. It'll be much higher right now, right? I mean, for example, कल डेविड बेली ने नाकामोटो लिया है, nakamoto.com, right? I mean, वो crazy दाम पे लिया होगा उसने. It'll be millions of dollars.
इसी में ट्रेड कर सकते हो आप 10 साल में. नाम ही ट्रेड.
तो my wife was like, यार ये क्या, ये नए शौक कहाँ से आते हैं? तो मतलब 30 लाख का एक डोमेन नेम, ये क्या है? And many of my friends were pronouncing Santoshi. What the hell does it mean, man? Santoshi Wealth क्या है? DG, what's he up to?
ये नाम तो दे दो.
है ना? तो मैंने अपनी बीवी को बोला कि तुम 10 साल रुको, इसी को बेच के हम अपना रिटायरमेंट फंड बनाएंगे.
Santoshi is too good. Do you think it's Jack Dorsey, by the way? I always ask crypto enthusiasts.
I don't know, yaar.
I don't.
Yeah, it doesn't seem like.
All of us want to believe that he's this very, very brilliant person who's misunderstood, but I really, but at least the more, and I've heard him a lot, and you see through people after you hear them like multiple times, very hard to fake your authentic self over like 15, 20, 30 long conversations. So unlikely.
Yeah.
I mean, I know all of us want to find out who it was, but at least I really doubt. I mean, Elon has a higher probability of being it versus Jack Dorsey.
Yeah, but DG, how does something like this work? Like for a lay person, if you were to explain, how does Satoshi Wealth work?
Yeah, so I'll give an example, right? So MicroStrategy is one of the Bitcoin treasury funds. Okay. What it's basically, what do these companies do? These corporate Bitcoin treasury companies do. So the way these companies work is, they buy Bitcoin and put it on the balance sheet, right? So they dilute their shares or they raise debt in form of convertible bonds or some other instruments. And basically they raise capital and they keep buying Bitcoin and they put Bitcoin on the balance sheet.
Okay.
And as the value of the Bitcoin increases, the value of the shares increases, right? Now, couple of years, so MicroStrategy started this 4 years ago. I was a pioneer in this 4.5 years ago. For the first 2.5 years, a lot of people did not understand this. How will it create value? Why there is something called as a MNAV? What is the ratio of net asset value to the market cap of the company? Why should it be more than 1? Your company should be valued equal to the amount of Bitcoin you're handling. But it trades at 2 or 3 or even 4. Some companies trading at even 5 sometimes, right?
Market cap is 5 times Bitcoin on the balance sheet.
So it makes sense, right? You keep diluting your shares and keep buying Bitcoin, right? I mean,
Yeah.
Because you all effectively what you're doing is you're increasing the number of Bitcoin per share of the company. That's your
Correct.
key metric. So that's a number one metric. So earnings per share is replaced by Bitcoin per share,
Bitcoin per share. Got it.
right? And there's a metric called Bitcoin yield, right? So there are some new metrics that have come up to track these companies. So a lot of people thought, and still think, by the way, that this is a Ponzi scheme. You know, you are just diluting your shares, buying Bitcoin. Why should you be traded higher? But if you start to go a little deeper, then you realize, you know, these companies are actually adding a lot of Bitcoin per share. So for the same number of shares, if I hold the stock of the company, I am continuing to add every year more Bitcoin. So that means it is generating value more than the value of the cash, which is Bitcoin on the company, right? So it's generating more value, correct? And that's why it trades at higher. Now, so you have to go a little deeper to understand why it trades. So that's why these companies get shorted also a lot, because some hedge funds don't understand this. So say the value should be equal to the Bitcoin you're holding, so they keep shorting it. Yeah, so it creates a lot of interesting opportunities to trade when it's heavily shorted and all of that. Now, but it doesn't stop there. You know how US as a market is. It's an amazing financial market. On top of this, there are now these leveraged, you know, ETFs built on MicroStrategy itself. MSTX, MSTU. Then there is someone who's actually shorting MSTR or selling calls of MSTR. They are also giving a dividend every month, dividend of almost 10% every month. It's been consistently coming, you know, like, so 100% yield dividend instrument is 100% annual yield dividend. Like, it's crazy, right? That's crazy. You know, even MSTR has come up with an option called perpetual option called strike or strive, one of the two. They have two options, strike or strive, where they pay a 10% dividend yield, 10% yield, and it's a perpetual option. Okay. The perpetual option is, so MSTR today is $420 as a price, but the perpetual option is, the strike price is $1,000, right? And it's a 10% yield instrument. I think it's a crazy option for someone who doesn't want to take any risk. I believe, you know, you can get a 10% plus also a lifetime option of, you know, $1,000. I think it'll hit somewhere in 3 to 4 months as the Bitcoin price increases, right? So some of these things are happening because the market is so new. Anyway, there are so few people who know Bitcoin. Usme se bhi so few people who know these corporate treasury companies. There's so few people on top of that who understand these instruments and trading in these. So there's a lot of value that can be created if you really try and go deep into some of this. Of
You're
course,
saying that because this is a new market where the asymmetry of information is so high that the kind of IRRs that can be made is crazy. And this will, over time, as Bitcoin became more mainstream and the potential IRRs or potential trading opportunities.
So MicroStrategy was a $1 billion zombie company in 2020, 2021, right? I think today's valuation is 120 billion. Okay, in 4 years, right? And I think this year it'll end at between 300 to my bet is I think around $500 billion. So from 1 billion to $500 billion in kind of 4 years or 5 years. It's the highest performing stock in the US.
What is MicroStrategy's? What is their Bitcoin holding on the balance sheet? How many?
Crazy.
How much?
That's what I was going to answer Evan's question. So this game will be over probably in the next 4 to 6 years. Okay. So now a lot of other people have woken up. Masa woke up a few months ago. So a lot of people are waking up, right, and launching this. I had made a call, I think, last year that almost every company will want to do it at some point in time. जब मेरे को समझ में आया था basically. The moment I understood, I felt, you know, every company would want to do it at some point in time. And so now I don't think it's easy to beat MicroStrategy right now. So then last year, and I met the MetaPlanet guys also. So MetaPlanet was a very small zombie hotel company. Okay, they had like 1 or 2 hotels in Japan. $10 million worth, right? $10 million की company थी पिछले साल, last year. And now I think it is. I've not checked the last valuation. I don't track it very actively, but I mean it is close to 1.5 to 2 bill in 1 year. And again, going to $100 billion company for sure. There's no doubt I have that it'll be.
And how are they doing that? They're raising capital to acquire Bitcoin at the right place.
It's the same simple strategy, right? It's they raise capital and they acquire Bitcoin. That's it. They dilute their own shares. So they almost every day they do a rights issue called a ATM, right? They tap the market every day to raise capital. That's equity raise, but they also raise from time to time debt because the volatility is so high. So convertibles are priced so well, right? So they are able to almost get a zero coupon. I mean,
Yeah.
MicroStrategy for the
And
last few
anyway,
months is not getting a.
Japan, the interest rates are anyway low, right?
But Japan has other problems of raising. I mean, the freedom which, for example, MicroStrategy has to raise capital, MetaPlanet does not, but they have done very well in raising capital. Like now every week, I think last week, how much did they raise? Last week they bought $150 million of last week of Bitcoin. Imagine a $10 million company, a zombie company. Okay. And now look, in Japan, there are thousands of these zombie companies, okay, which are not able to deliver shareholder returns, which are going nowhere basically. They are stuck in no man's land, right? All of them will look at MetaPlanet and say, wow, from 10 million to a $2 billion company, relevant on a global stage, getting, Eric Trump on the board now, getting it, invited all over, the guy is famous, known.
And the only thing they've done is they've kind of gone and consolidated.
Yeah.
That
So
sounds
I
that
wrote,
sounds too easy, right? Like that's
I wrote an article on this called "The Fastest and the Easiest Way to Build a $100 billion Company." Like, I mean, I would have done it in India if Indian regulator, if I trusted the Indian regulator to support such a thing. I was not sure whether SEBI or RBI will really understand or will back it up. But Jet King is trying in India, so I know the Jet King promoter well. Keep because I'm in the field, so I know this as well. So Jet King is trying. So Jet King is the same level. Jet King is a $10 million company. I think not even probably 10. Yeah. So same as MetaPlanet. They have made the first purchase now. I think they raised $1 million last month to do it. But if it goes in the same direction, probably it'll be. But again, the risk in India is, of course. So you need to have. I mean, the only prerequisite of this is you need to have deep capital markets to be able to do it. So it's happening in Europe. It's happening, of course, in US at a very different scale. It's happening in Japan. It's happening in Brazil. It's happening in Middle East. To some extent, not a lot, because Middle East again does not have a very deep capital market. There's a formula by which the number of bitcoins every 10 minutes can be mined, right? So every 10 minutes, a certain number of bitcoins can be mined, and it halves every 4 years. The number of bitcoins that can be mined every 10 minutes. So we are right now, it's 16 years. So we are in the fifth halving cycle. 4 halving cycles have happened. And it'll continue till 2140. The last Bitcoin will be mined in 2140. But 90, how much? I think more than 19 million of these have been mined, and 99% of Bitcoin will be mined by 2034. So already a very, very large percentage has already been mined, right? I mean, more than 90% have already been mined. So yeah, it's a very, very scarce asset. So currently with this halving cycle, it has half the scarcity of gold. So gold is scarce, and that's why gold is valuable. But Bitcoin already is, 2x scarcer than gold. Which is, it has something called as in commodity valuation, you track this metric called stock to flow, S2F. So how much stock you have and how much flow you are generating, right? So gold has stock to flow of 60, which means in 60 years you can mine the same amount of gold as you have as stock today, right? Overall. So gold stock is about, let's say 200,000 tons or 250,000 tons, somewhere around that, right? So in 60 years, you'll be able to mine that amount of gold. So every year you're mining basically, you're mining 1 to 1.5%. So that's the supply inflation of gold. Bitcoin supply inflation is already at 0.6%.
Oh wow! So mining
after
versus
this cycle. So in
stock
10
to flow is
years,
higher.
So in 10 years, and the problem with gold is, I mean, anyone who likes gold likes Bitcoin. Anyone who likes Bitcoin likes gold, because both are giving the same value, which is store of value, and that's why it's very similar properties, right? But I like Bitcoin better than gold because it's scarcer. I mean, the gold case problem kya hai ki if the price increases tomorrow, right? Let's say it goes to $10,000, right? Then new mines will come up. New exploration will happen. We'll dig a little bit deeper, right? China, for example, last year came up with many new reserves, mega reserves, they call them, of gold, right? So now, but Bitcoin is fixed. And in 10 years, if you apply this halving cycle, you realize that Bitcoin's scarcity will be like 32x, right? In compared to gold. And that's what drives fundamentally the valuation of any commodity.
But
Stock to flow.
is gold value only, does gold's value only come from scarcity, or kind of also social and cultural signaling and so on, which possibly Bitcoin cannot do,
Currency of
right?
reserve, no? I mean, if you look at when the Trump tariffs got announced, why did the gold price go up? Effectively, people thought, and in fact, and maybe you can touch upon this a little deeper as to why is there a big rush to actually keep physical gold with yourself now? Like, there was a lot of news around India getting a lot of physical gold kept in the Bank of England back to India. There is news that Nikhil Kamath has a lot of his money in actual physical gold in the Middle East. Why is the I mean, and there was a lot of push on Bitcoin becoming the currency of reserve by definition when it got launched. I don't know when it gets there, or is it already there? But your views on gold versus Bitcoin, and why specifically there is a increasing trend towards looking at actual physical gold versus just the keeping gold as maybe a digital asset.
Yeah. So look, gold. Why gold? Right? Gold has been there for 5,000 years. Why gold came into being? Because of the same properties as Bitcoin. So Satoshi would have been inspired by gold to an extent to get to Bitcoin, right? And otherwise, it's such a brilliant concept that you can't get to it without gold, right? So you have to understand gold to get to Bitcoin. So gold became gold because gold was scarcer, right? Um, uh, and human civilization tried with all kinds of reserve assets or monetary assets as store of value, right from rocks to seashells to grains to copper to silver, etc. And then finally, eventually landed at gold. Silver. The problem with silver was that a lot of silver is available. Silver's stock to flow is much higher than gold. You can mine the entire silver that you have today in 20 years, right? So platinum is 10 years, copper is 10 years. So that's why a lot of these things started to fail, because as the prices went up of silver, a lot of silver would come in the market. It would cause monetary inflation, and it would have the monetary system of the day crumble because of the inflation, right? Because more of those things could come up, right? When the price of these rocks went up, this island was using rocks. People started bringing rocks from ships to from other island, right? So there are a lot of stories of how the money supply inflation caused a lot of problem, right? Inequality and a lot of other things, right? So when gold was found 3 to 5,000 years ago, gold's inflation was lower than anything that human beings had discovered, because you can't produce gold on Earth. Gold gets created as a form of stardust, right? So there's a limited amount of gold in the earth. There's a limited amount of gold of course, there's a lot of gold in the universe, but you can't bring it down. So that's why gold was chosen as a thing where the inflation was the lowest. Monetary inflation was the lowest. So it continued, and over a large part of our history now, gold has been the reserve asset. On and off, silver also showed its surface few times, but always failed compared to gold. My favorite example is in the time of Spanish era, they had two currencies: gold-backed florin, because florin had come from Florence, and lira, right? Which was silver-backed. Both had the same price when they launched in 13th century AD, but in 200 years, the gold backed was much more stronger, 7 times more than lira, right? Florin was 7 times more valued than lira, although they had started the same metric 200 years ago. So it also exposed the whole fallacy of silver-backed thing. Why was a silver-backed thing then required? Because for smaller payments, day-to-day labor wages and all of those, there was a smaller currency, silver-backed lira, and for global tax settlements, import and export, big dowry payments, gold was used, florin was used. Like that was how it was, right? I do expect a similar phenomena to happen in the next 4 to 8 years, which is, for big international settlements, you'll have Bitcoin probably as a thing which will get used. Of course, gold will also get used. And, like, I'm not saying either or. There's no reason why we should choose one over the other, right? But there are advantages of Bitcoin over gold. I mean, storing is very easy. You can settle a trade in less than a few minutes. The cost of the trade is very, very low. Like I can send billions of dollars of Bitcoin to someone with literally, cents as cost, right? And the timing is amazing. I mean, in 10 minutes, now maximum 10 minutes, it settles, right? So there are a lot of advantages. Gold, you have to secure your gold. You have to keep it in vaults. You have to protect it. You have to secure it. You can't like settle so easily in gold, right? You asked the question on why do people are, bringing back gold. US brought back a lot of gold. India brought back a lot of gold. China is buying a lot of gold because everyone knows this old system, monetary system, is giving way to a new monetary system. The old monetary system, which came into being after 1971, of dollar being delinked from gold. Gold peg of dollar was removed in 1971, and dollar became the dominant reserve currency. And the way they did it was they basically inflated, or they worked with the Saudis and they inflated oil a lot. And then dollar had to be needed by everyone because oil was coming out of Middle East and everyone wanted oil. So they inflated the price of oil and then dollar was needed. So dollar became the dominant system, and it was easy for it to kind of become the reserve currency where global settlements, not just oil, but every other settlement started to happen in dollar. And then they removed gold. Why it happened? Because there's a story that France had asked for its gold from the US, and US probably did not have it or whatever, and they removed it. Now, but the problem which happens then with this whole dollar, when any currency of a country becomes the reserve, there is something called as a Triffin's dilemma. Now, Robert Triffin, a famous economist of 1960s, had written about it. That if you have to, if an economy's currency is a reserve currency, then it has to supply that currency to the world. How does it supply that currency to the world? Because otherwise there'll be lack of that currency. How would the other countries kind of buy oil? So US had to supply dollar to the world. How would US supply dollar to the world? By running a trade deficit, by running a perpetual trade deficit. So US ran a perpetual trade deficit from 1971 to now, which hollowed its military industrial complex, which removed manufacturing. US became more a financial economy, right? And the huge gap emerged between, and US enjoyed that 55 years of glory of, the people, young or old or middle or poor, no one had to like care about tomorrow because there was this big state protecting you. COVID happened, they gave out money. Indians suffered, Europeans suffered. US did not suffer. US middle class bought these fancy sofas from Weber's, because of the $3,000 they got from the state, right? No other country was able to do that because US could print at will and give this money and all that. But eventually it has led to a state which does not have its own manufacturing, which has hollowed out its military industry complex. They can't even manufacture their own weapons. There's a huge divide between the Main Street and the Wall Street. The Wall Street is rich. The 10% of the people are very, very rich, living at the coast. But the middle and the Midwestern region is very, very poor. So the Main Street is really poor. Wall Street is rich. No manufacturing. A massive amount of debt, where the interest servicing on the debt is higher now than the military expense and the healthcare expense and the social security expense. So US is has come to a point where it will most likely default unless things change. And what is the change? That US has to get rid of dollar as a reserve currency. So US is now leading charge saying, hey, dollar does not want to be a reserve because we can't afford dollar to be a reserve. We've already suffered a lot now. And now putting a blame on other countries of, hey, that I was, you enjoyed the 55 years, right? And now you're saying, hey, you guys are running a surplus on our expense, but you guys enjoyed of dollar status as a reserve. So now dollar doesn't want to be a reserve. What does that mean? US wants to balance trade, which is make its trade deficit zero. But it can't happen because, currencies are now not hooked to anything. There is no barometer of measure of any currency, right? Yuan can keep devaluing. INR can keep kind of devaluing. So anyone can devalue, even if a trade deal happens today, let's say. What stops China to devalue the currency? Last time also it happened when Trump did the trade deal, China devalued and then they were also exporting. So the only way this can happen is by bringing a neutral currency of settlement. So let's say gold is a neutral currency of settlement tomorrow of global trade. Then the currencies will relatively adjust basis the trade balance to that neutral reserve. So dollar will devalue a lot because US is running a deficit. So dollar will devalue a lot compared to the neutral currency, all right? And that will over time balance the trade because now dollar is devalued, so the imports are becoming more expensive in the US. Exports are becoming right, so imports are becoming a lot more expensive. Exports are becoming cheaper, so that will naturally be a valve, a pressure valve to balance the trade. So everyone knows this is happening. The dollar will give way to a neutral reserve currency, a harder currency, which is either a gold for international settlements. Your and my payments and all that will still keep happening in the normal currency, right? But for international settlements, there will be a barometer of a neutral reserve, which could be gold or Bitcoin. There's another reason I like Bitcoin more than gold. So US is kind of leading the charge in driving this, right? As a big economy and a big, big market. US knows this. So US owns 8,000 tons of gold. But India owns 30,000 tons of gold. China owns 30,000 tons of gold. Would US let India become 3 times richer than US? Would US want India to become 3 or China to become 3 times? Because Indian government owns only 2,000 tons of gold, but Indian households own 25 to 30,000 tons of gold, right? So in any case, India is getting richer. In this whole scenario, India is getting richer, right? It's a great scenario for India because even last year, Indian households have added now $1 trillion of wealth. That's large amount of wealth which has got added in India, okay? Which creates so much cushion for growth, for credit growth, for consumption growth and all of that, because we've added $1 trillion of wealth in India, where the stock market cap is only $4 trillion. It's a $4 trillion GDP. You've added $1 trillion of wealth, household wealth over the last 1 year. And gold goes to $10 trillion. You imagine the amount of household wealth India will add, $7-8 trillion of household wealth India will add, right? That's gonna be so. It's a great scenario for India any which way because gold is going up. There's no doubt. But US will try 100% US. If I was US, and I use this human psychology game theory a lot, right? I mean, I have a lot of free time right now, so I do a lot of this thinking. If I was US right now and I'm thinking, like, would I want India and China to be the richest nation in the world? No. And basically, US only owns 8,000. Households don't anything in the US because it was illegal to hold gold between 1934 and 71 in the US. You could be jailed if you're holding gold. So no one holds gold in the US, all right? Individuals or households. I mean, they hold, but very little compared to India. So 8,000 tons US holds. China officially holds only 2,500 tons, but unofficial estimates and household estimates are again going up to 25 to 30,000 tons. But clearly, so this game theory will play out. US will try to push Bitcoin, and you can see it is already pushing. President Trump is talking about it a lot and calling it a strategic reserve and all of that. There's another reason why US is pushing for Bitcoin, because higher the Bitcoin or higher the crypto industry goes, higher the stablecoin market grows, right? Why stablecoins? US wants dollar not to be the reserve currency, but it still wants dollar to be the dominant currency. They're two different things. Now, what's the dominant currency? Right now, US
still in dollar is what they would want. I mean.
No, they want to be able to still refinance all the debt, right? Which US has. US has a huge debt. Who will buy the treasuries, right? Who will buy this $20 trillion of debt coming to refinance? If everyone is shunning dollar, there's no one who's buying the treasury. And that's where stablecoins come in. So if you look at the last 2 years, the stablecoin companies, treasuries, have been the largest buyer of US treasury. Tether has been the largest buyer of US treasury, right? So the more the crypto ecosystem grows, more Bitcoin grows, the USDT grows or USDC grows, so the whole stablecoin ecosystem grows. And then what they want is basically someone to hold the USTs. So these companies will hold the USTs, and so because sovereigns no longer will buy the UST, so that's why Stablecoin Act, the Genius Act, which didn't pass, I think last week or 2 weeks ago. Stablecoin is a very, very important phenomena right now in the world. And US will push stablecoins. US will push crypto because of 2 reasons. They want the USDs to get funded. That's number one. Number two, they will not want India and China to become so rich. And China is betting big time on gold. So that's why I think there's a trade war, there's a military war and all that. There's also be a reserve currency war between gold and Bitcoin. Both of them will benefit because there'll be a set of people who will push gold. China will push gold, obviously, right? Because China has lesser Bitcoin than the US. US will push Bitcoin, of course, and US will have its allies also push Bitcoin. So Trump is in Middle East right now and Saudi and all. They may push.
It's very interesting how you actually interlinked all three. I mean, there was a lot of chatter around. If you see the serendipity / coincidence of US and China being at loggerheads in a 125% plus tariff war, suddenly there's an attack on India. India gets embargoed in a warlike situation, and voila, US and China announced that they're taking a 90-day break, and they seem to have arrived at a consensus as to how the two countries will trade together. And there's a lot of noise around the fact that China maybe have instigated Pakistan in leading that attack. It just seems that the flow of money and these larger schemes of a 30-year period of which country would want to really have the balance of power over like 30, 40, 50 years governs a lot of these short-term things that, we get very excited and anxious about. But there seems to be a much larger play at these things, at least from what I hear from you.
So Revant, you hit it on the head, right? And 10 years ago, I used to think I know a lot, and this is how the world moves and all of that. And now I think how naive I was, right? I basically knew nothing. Everything that happens, which in our boardrooms or in investor conversation we think because this is doing that and that's what is happening, it's irrelevant. It's absolutely irrelevant.
Small pawns in this grand scheme.
Yeah. Let me also make another point I think whatever India does or not does to itself, to others, it's irrelevant right now. In the broader macro, things in the world, like if India has a lot of startup success, very small part of that onus is on India. 99% is on the US, right? If Indian startups are doing IPOs very successfully, very small part of that is, India. 99% of this is US.
Because capital flows. You're saying interest
because
rate.
Of liquidity. Because of liquidity. So I have also come to this conclusion after a lot of reflection that all these earning multiples and all of this is kind of bullshit, right? Fundamentals don't matter, technicals don't matter. The only thing that matters is liquidity.
Liquidity, yeah.
If liquidity is good,
yeah,
market will go up. Every Tom, Dick, and Harry will continue to raise money. If liquidity is bad, even the great companies will fail. So look at 2021. What happened? Crazy amount of money came in, right? I mean, the companies, if you look at the money that came in, the company that came in, right? And you draw them out, and you should maybe do a podcast on it sometime, right? You see, will they get funded now?
Yeah. No, I think this is any enough growth stage and late stage investors have now accepted. Like whenever we talk about even VCs, for example, when they talk about the 2021, 2022 vintage, they're like, it's that vintage may, as long as we are top decile, we are okay. And everybody made mistakes, right? So I think in that sense, now today everyone accepts that we should not have been that exuberant because it was just liquidity and not anything else. The world did not fundamentally change. If you take a 30, 40-year view, there is a certain pace at which things happen. Sometimes there are accelerants, black swan events that happen like COVID, like post-COVID, what happened, or, a potential long drawn out economic war between US and China, or the 10, 12-year ZERP era that we had almost in the US, or go back to the Great Recession 2008-9 or .com 2000. So there are enough people who make outlier money in those cases, maybe going extreme on each ways, either shorting it because expecting that this is all euphoria, it will go down, or the other way around. But fundamentally, businesses can only use these instances to get a leg up to maybe accelerate some of their initiatives, but they should not change their core DNA and try and do 20 things like.
So you're right, Revant. I think, if you look at liquidity for the last 20, 30 years, right? Every asset class has to treat the liquidity environment in a different way. An entrepreneur has to use the liquidity environment to fortress the capital base, raise more capital. Okay, that's a smart move for an entrepreneur. For a VC, by the way, it's a very difficult play. I'll tell you why. Because VCs get extra excess liquidity during that environment. There's this whole momentum and all of that. That's absolutely the wrong time to get in because you have no control on the exit. Okay, and that's why VC as an asset class is not delivering great returns over the last
16 onwards, it's been it's
several cycles because of this phenomena that their investment is actually happening at the peak of the liquidity cycle and they have no control on the exit. All right. So if I was a VC, I would actually use the liquidity environment to make my exit. I would sell at the peak of 2021, not invest at the peak of 2021, ideally, right?
But interestingly, when I talk to most of the LPs, I don't think they have any grouse with their VCs investing in the peak because they said we also gave them money and said, boss, tum deal kyun nahi kar rahe ho?
Because everyone has liquidity there. No, that's the whole policy of this. Liquidity works like that, right?
But they do have a grouse of the fact that exits were not done at that point of time because that's the GP's call. Ki mere ko ab exit le raha hai karke, right?
So smarter, look, I mean, 1 or 2 cycles. So liquidity is a 65-month cycle. All right. So 1 or 2 cycles, VC don't understand this. They start to understand it in the 3rd or 4th cycle. So that's why you see mature VCs like Ravi of Elevation or someone, they were very clear of taking exits in 2021. Okay. But the early VCs, people who started in 2012 or they started career in 2014, 15, 16, for them, it was just, they didn't understand this 65-month cycle at all, right? For them, it was still a second time, a third cycle. Once you've gone through 2-3 of these cycles of liquidity, then you realize, hey, now another cycle, for example, of liquidity is coming now, right? I mean, this year probably will see a huge peak in liquidity. Entrepreneurs have to raise money in that. VCs have to exit in that. But ulta hota hai. VCs actually, I didn't understand this myself when I was like running review.
No, I think it's a question of playing through cycles. I mean, I may sound a little pompous in this, but in that era where there was, and I think Shantanu and Chirag, I unfortunately was unwell for that episode, so they did an episode on the Thrasio model. And because we are multi-brand but we create everything ourselves, there was a lot of question on why we can't buy and build, right? Like Thrasio. And we had capital. Like the balance sheet was pretty strong. But that point of time, it seemed a very hard decision to say no because you did question ki yaar kaise hoga karke, how hard it was to build. Buying something and building is even harder than building it yourself, in my opinion. So, but enough people took that call to pivot to that model because capital was easily available, and it seemed that this is the only time this model can work. But that's the counter that when the interest rates went to 4-5% and the capital died away, suddenly the model became questionable. Especially because in that time period, no one could make the economics work. I mean, people have to figure out, and all of us are finding our way to PMF, right? Like, I could argue that Instamart is still trying to find PMF with the kind of burn that they're doing, but that's a different story. It takes 8 to 10 years to really find a very, very solid, scalable, profitable PMF for most startups because we also have to see these cycles through and understand where the real profit pool lies. Like I could argue today that last week we had discussed Urban Company, we saw the Zomato and then the Swiggy results. Seems like most of these new age companies like an Amazon which does a 6% EBITDA today after 30 years or so, will be a 5-6% EBITDA business, right? But it'll be massive scale businesses. Like they could get to like Amazon, I think is $600 billion or so in GMV. India could see these $100 billion GMV businesses making 5-6% EBITDA on a let's say a net revenue of $20 billion for it. And that's how the absolute, and of course they have to find ways to generate ROCE, which is either through working capital, having negative working capital, or different ways to make sure that shareholder return is delivered. It's not just EBITDA, but getting ROCE after that as well. But I think it takes a lot of time to discover these real profitable, scalable models. And maybe this, 5-year cycle is not enough for people to really scale and then play that. Maybe that's the mistake that sometimes we make, that we celebrate too early. Like we've just finished 5 years and a lot of people are saying, great, business looks great. I'm like, ruk jao, let's see 5 more years because my team gets surprised ki aap itna conservative kyun ho karke. And I'm like, we still haven't seen what the real problems could be. And it could get easier and maybe wrong, but it could get harder as well, right? Because like when I started, the health and wellness market wasn't large enough and everyone said market risk hai. Ab log bol rahe hain market acha hai, lekin loyalty risk hai because everybody does the same thing. So the dynamics also change and you need to maybe keep thinking about your potential North Star, which for businesses like mine and Shantanu's will always remain customer NPS, right? But that also needs constant evolution. Like what was great 5 years back is now par for course.
Yeah.
Now redefine
Yeah.
data, right? So there's a continuous effort. Like 45-minute food delivery at home seemed awesome through an app. Now Swiggy is saying that 10 minutes is going to be the norm, and that's how we are going to grab more market share, right? Everyone thought grocery is done, and then Zepto came along and really pushed the bar and said 10 minutes. Now, of course, there's still a lot of questions on the model because apart from Blinkit, nobody seems to have a hold on ever getting to profitability. I mean, I'll put it out there. I actually fundamentally would question the amount of capital that will go into even create shareholder return. That's very, very risky to play, especially for a market that will never have a shortage of demand. Everybody needs grocery every day. So there's no fundamental. You need to find a consumer experience at a very low variable cost where the economics work, right? And it's a very hard thing to do in a market like India, especially where consumers are still learning to pay. But sorry, long thought. But I think you're right. I think the liquidity cycles and the real innovation cycles are a little longer, at least in a shorter, smaller TAM slash cultural nuance market that we have, where we just need to be a little less euphoric and a little more detail oriented and careful, I guess, while building out businesses or while investing as well.
It also comes down to the same thing. No, I think the biggest alpha between good asset managers and slash founders, CEOs is allocation of capital and allocation of risk, right? So high liquidity cycles will test that to the core without without it there being immediate feedback on the same. When liquidity is crunch, then you can obviously test for allocation capability. But when liquidity is high, that's when no one, like, it's a test, but you'll find out the results like 3 years later. And that's when, kind of the
And
good
it
gets
takes
separated.
and it takes a few cycles for VCs and entrepreneurs to
Fully
understand this, and that's why I'm so bullish on Zomato compared to anyone else in the Indian market, right? Because Zomato has gone through these cycles, have taken lessons from those cycles, right? I think QIP last year was a brilliant move, to be honest, right? Brilliant move, very well timed, very well
Before we move into
timed.
the Zomato, I know this is a nice segue to the Zomato Swiggy discussion that we had planned. But DJ, I wanted to get your view, and even Revant, yours on a very interesting chart I saw of the S&P 500. I'm just going to share my screen. Over the last 230 years.
The only chart I liked is what Chirag. So Chirag is a chart man. Deepak unfortunately couldn't join today because he's unwell.
Okay.
He got me into finally lifting weights by showing me a chart where he showed me 1980 to 2015 S&P returns 13%. 50 companies whose CEOs lifted weights, returns 20%. अब मैं जा रहा हूँ जिम जा रहा हूँ मैं.
ये क्या proxy
That's
है?
amazing. That's amazing.
But look at this chart, DG Revant, from 1789.
I also have an interest in astrology, right? So I will give you another insight on this, why it happens, by the way. If you are interested, just to...
Oh, for sure.
बोलो. तो क्या होता है, when you lift weights, right? So your Mars as a planet becomes stronger. All of these CEOs are warriors, okay? They are driven by Mars as a planet. Mars typically is a strong planet in there. So when Mars gets stronger, they deliver great results. So it happened with me in my life. In 2014, I was leaving McKinsey. Okay. 2014, I was leaving McKinsey and I joined this gym in very close to my house in Gurgaon. Okay. And I did crazy amount of weightlifting, 3 months. And then I left McKinsey, started Revigo, had a phenomenal first year. Okay. Like, if first year of Revigo, it's for the books. We went from zero to a $300 million valuation, right? And we're profitable and all that. And before every key meeting, I would go to the gym because I thought, it's just somehow, my luck is increasing with the workout. And from every big speech or a town hall, I would definitely, my early team would tell you, like, I'll definitely go to the gym. So a year later, I went to this, head coach of and then I was now irregular going to the gym. I said, hey man, thank you. Because of this gym, I think I'm doing really well, and I've started Revigo and all of that. The guy he said, no, sorry. If you think Jim led you to leave McKinsey and then start this, and that time it was called Trucks First, some small trucking company. He said, no, I'm sorry. No, I said, I'm serious. Because of the gym, all of this is happening, and I see this connection. Intuitively, I don't understand it yet, but there's something happening. There's a connection between lifting weights and this. So what Chirag showed, you may see it as a correlation. Sometimes, we want, I had this favorite saying, humans want rationality, for them to give belief, for their heart to kind of have that conviction. Actually, जो दुनिया में causality है ही नहीं. There's no causality in the world, okay? Things are only correlated. Causality is a need of a human ego,
To rationalize what they're seeing,
right?
feeling.
Right? To rationalize. So I don't give too much importance to causality. And that's why I'm fascinated with also how, correlation of the last 200,000 years of planetary movements made things happen, because that's the only constant I know, right? I mean, for 1,000 years, I can know the space time of different planets and stars and all of that with respect to things with respect to small things at Earth. I can't have anything else on the planet Earth. I don't have data. Probably I have data. Probably people have done a research on the water levels of Ganga or Nile or whatever, and you have some data around that. But other than that, you don't have any data, right? So if you correlate them, you find certain insights. So I am only trying to give you a causality that Mars, warrior, and how you would see your luck will increase if you're actually doing weightlifting. So whoever is listening to this, there's definite linkage between weightlifting and stock price performance, guaranteed.
Not
DJ,
in the stocks you invest, but invest in CEOs who are actually lifting weights. और लोग कर रहे हैं जिम जा रहे हैं और बोल रहे हैं यार स्टॉक प्राइस जीरो पे देख रहे हैं स्टॉक प्राइस नहीं बढ़ रहा है करके. But let's quickly, because we could go on and on this, but we are coming to your point on Zomato. Your belief is Dipinder having seen 3 to 4 cycles now. Actually, the company was born in 2008, so he's also seen the Great Depression, and maybe part of the reason why there was a 33% dilution in the seed round to now, I think, one of the best investments ever in the history of venture, if you can think about it that way. For InfoEdge. He's seen that, then he's seen obviously the 14-15 cycle, and not a lot of people know this because today everyone goes gaga over Zomato and Eternal, but there were a lot of times when there was an existential question on the business, like when Swiggy did food delivery and it was Zomato was still a classified business. Dipinder had publicly come out and said he'll not do delivery. He had done a very expensive acquisition in the US called Urban Spoon, $275 million or something, which actually shut down. They were doing very well, profitable in the Middle East, but they were so strapped off capital, I think late 2018 or so, he had to sell the business just to get more cash for the India business, which was doing well, right? Then they had to merge with Uber Eats again to just make sure that they would keep. I mean, he was always that wartime CEO. I don't think he was ever a peacetime CEO because the business was never at peace. So maybe he's seen 4 economic cycles, but also he's seen, I think, 10 to 15 war-like situations where you have a 1-year runway. And I was looking at the numbers. I know Swiggy had said that they are going to reduce the burn now. This was the peak burn, but we don't know what happens. Like if you look at the cash balance for Swiggy post the results, based on the last quarter, if you extrapolate, they have a 1-year runway, which is a very scary thing for a 80,000 crore market cap business. And even if they cut it down, this cash balance is not comfortable, I would say, having a 6,500 crore cash balance with at least, let's say they'll burn 3,000 more crores over the next 2 years because they're saying profitability is 5 quarters out. You don't want to have such a low cash balance when, you are at war with not only Blinkit, but Zepto, now Flipkart Minutes, and that's where the war will happen, right? Food delivery, I think both Zomato and Swiggy are very clear that they will now start juicing more and more EBITDA there. They'll accept a 15-20% growth rate. Though Swiggy, Rohit Kapoor has clearly come out and said that they want to win more market share, which they are. I think Zomato has clearly said that it's okay for you guys to win market share, but we want to make better economics here. And that's what we are seeing reflect in the GOV share as well as the revenue share. Interestingly, Swiggy gets more take rate from its restaurants plus ad revenue than Zomato. So their take rates are a little higher. The revenue to GOV ratio is better. They're growing a slightly faster rate. But what is interesting is if I look at the EBITDA, Zomato is already at a 4.5% and looks like long term it's going to be a 5-6% EBITDA business. Because और juice नहीं कर पाओगे आप. You're already at a 50% growth rate. You don't want to end up in a situation where you are squeezing both customers and merchants so much that you want to give up market share for a new incumbent. Like what Rivigo is doing to Uber and Ola both with this low commission model in mobility is bound to happen in food delivery as well. As a heads up, Rapido is launching food delivery in Bangalore in the coming month. And it's the same model as what they've done in mobility. They'll charge a fixed fee, like 15-20 rupees per order, and there's no percentage commission. So they'll try and do to Swiggy, Zomato what they did to Ola, Uber in mobility. So, looks like food delivery में अब 10-15% growth rate है, 4-5% EBITDA है दोनों के लिए. थोड़ा बहुत market share change होगा. I actually modeled out what happens if Swiggy continues to increase market share. I mean, over 4 quarters, if the Swiggy growth rate is higher, I took a growth rate of, let's say, 20% for Swiggy and only 15% for Zomato year on year. It's going to be a 44% to 56. So looks like Deepinder is not that worried about this because he's very clear कि यहाँ पे और juice नहीं निकालते. But he wants to win the larger next 5-year battle, which is the Instamart versus Blinkit story, where the lead is already big. And to your point, Deepinder seems to have taken a very, very strategic call that let's just go and over the next 2 years, because this is going to be a much larger TAM. And even at 5% EBITDA, going back to that thought process I had, there's a higher chance of us getting to $100 billion GMV here than ever in food delivery.
This is a very telling sheet. I personally think it's going to be very hard for Swiggy to gain market share in the next year. And you have modeled up because of the cash situation, right? If I was Swiggy management right now, I would think of slowing the burn, which will also lead me to give away some of the share gains I had over the last year when I was pushing hard. So I was pushing hard to go to the IPO, then pushing hard, right? But then I will take my foot off the pedal now and focus a lot on selling the story to the new investor, who will ask some of these questions around profitability and all of that, right?
But food delivery, sorry to interrupt, Deepak, but food delivery में उनका आप देखो ना EBITDA बढ़ रहा है. So amazingly,
yes,
credit to Rohit Kapoor, he's figured out a way to gain market share and juice margins at the same time, which is very rare but very commendable. So if you are earning positive EBITDA, would you not want to push more?
I will look at the next 1 or 2 quarters and data somehow. I would look at the next 1 or 2, because there was a lot of juice Swiggy had over the last 1 year to juice out, right? I mean, they were far below the matrix of Zomato, if I 1 or 2 years ago, in terms of the take rate, in terms of AOV, in terms of a lot of the cost structure, right? So I think they've got the easy winnings now. So I will wait to see whether we can improve over the next 1 or 2 quarters even more, because you're saying the take rate is already high, higher compared to, so there's no more juice there. Already, by the way, restaurants have started to say that Swiggy is now wielding a lot of pressure on them. And over the last year, restaurants were feeling the pressure heat from Zomato, and then they were starting to like Swiggy, and therefore Swiggy got that tailwind of growth. Plus, Swiggy had a lot of quick wins on the cost. I think Swiggy's cost structure is still bloated, particularly the overhead. Swiggy has a lot of people, a lot of overheads, right? I don't know number. I'm a very, मेरे को numbers नहीं देखता मैं ज़्यादा, but मैं ये मेरी overall market feeling है कि Swiggy का बहुत structure bloated है compared to ये, but yeah. So easy wins आ गए हैं. The restaurants have gone back to Swiggy, but if you see what restaurants today are saying, they are actually they think Swiggy is a bigger, dictator, or than Zomato. So I think we'll see the next 1 or 2 quarters. But you're rightly saying that the fight is going to be in quick commerce, and that's where eventually it all boils down to cash position, Revant. And so I look at 3 things I look at the strength of the brand. I still think Zomato has a far better strength of the brand itself. Deepinder once said this very interesting line to me, saying revenue comes from service, but profitability comes from brand. And that's why he invests so much in the brand. The service is table stakes. Revenue comes from service, but profitability comes from brand. The ability to charge more, the ability to give you good services, the ability to launch new products, the ability to have that love. And this is more anecdotal, right? And people in Bangalore like Swiggy, people in Delhi like Zomato. But overall, this is my perception that Zomato has invested and done a very good job on brand compared to anyone else in the market. So they will always have a little bit of extra, and eventually all of the value resides in the brand eventually, because everything else can be copied and is similar, right? Brand is the holder of all the value, right, over time. And that's number 1. Number 2, I think Zomato has got a great team and has gone through the cycles, has built a very good technology team. So I think any AI play, any use of AI over the next few years, Zomato will have a certain edge. Three is just the economics in the cash position. Now it's a black hole. Now if you're sitting on 18,000 crores of cash, how much is it? Zomato is how much cash? Probably 18.
What was 18,000 crores, and their annual burn as of now, even at the peak burn cycle, seems to be less than 2,000. So they have an 11-year runway in if you had to calculate it.
But does this cash burn include the interest money they are earning on this 18,000?
This is the closing cash balance and burn generated from ops.
Okay, got it. Look, they're generating a lot of like interest on this money also, right? 18,000 crores. I mean, they're still generating a lot of, and Swiggy is generating probably 30-40 crores a month, and that's dwindling. So that'll increase the burn. That'll increase the burn in the next 1-2 quarters, because that, I mean, even if you reduce the burn, you'll only like be able to mitigate the impact of this 40-50 crores of interest money you were earning, right?
Actually, my bigger worry is, both these guys have said that to win the quick com battle, we will need to put about 2,000 stores, let's say at peak. And Blinkit has said by December 2025 to get to 2,000 stores. Abhi 1,300 hai, so 700 और store डालने हैं. Rough math, as of last quarter, they burned 1.5 crore rupees in capex for per store. So the math as per the financials publicly given was 700 और store डालने Blinkit को, तो they'll use 1,000 crore of this 18,000 crore to put capex. But if Instamart has to do the same, and they are at 1,000 stores to get to 2,000, and they are saying we want to win the quick com battle also, plus Zepto is catching up fast, they claim ahead of Instamart, so and Flipkart minutes. But they'll need like 1,500 crore of this 6,000 crore cash will just go to capex. Then you have operating burn. So it just seems very clear that in the next 6 months, Swiggy will have to raise capital again from the markets, which is like do an IPO where you raise 4,500 crores, then again go to do a QIP and raise 4,000 odd crores. Doesn't seem to be a great situation for Swiggy Instamart per se. And it almost seems like a venture game again where, everybody's trying to hog capital. To go back to your liquidity piece, like Zepto claimed that they will go IPO this year. Now they are saying that we're going to do a 600, 800 million private financing round and we'll go IPO next year. And it's very unclear as to where the leverage is, because, Swiggy's raised 4.5 billion. They'll raise, let's say, 500 million or billion more. Today, it's a $8 billion valued business. So it's getting to a place where we had hoped that after the 2021 saga, where a lot of companies went IPO at a very high valuation and then didn't deliver shareholder value, could we see that cycle again with some of these cash guzzling businesses?
Yeah, and one of the points I made was all the money, I think, and this is all probabilistic, all the money which Zepto is also investing now will eventually benefit Zomato in the quick commerce space. Because see, Zepto still has to see all of these cycles. Zepto has gone through
first down cycle because they were born in post-COVID. So they've only seen, they were born in bull run, continued there. And even when the ZERP era got over, at least the last 18 months, the Indian capital market, there was a lot of interest from India, domestic family houses. Even the current 300 million round where I heard, at least read that the Motilal Oswal promoters were investing 100 million in their personal capacity. It just seems that a lot of the Indian bull cycle still helped them. But yeah, this could be the first potential down cycle that they'll need to see. Fair point.
Yeah, and so I look, if you look at it, let's say we are in 2035 and look at top down, right? There'll be one consumer tech company at the top of the market cap chart in India, right? I mean, top 3 could be even the top company. That has happened globally in every other market, so it'll happen in India as well. If you ask me which could be the top, if I ask you, who would you bet on today to be in the top 3? And what will be by the way, so I have two questions. What will be the valuation of these top 3 companies? And which company today has a bet on to be in the top 3?
See, for me, the first question is much harder to answer because I always believe that India will always surprise us on the upside. So it's better to just go with backing a business that has a very long-term strategy and sound unit economics. And I don't know if people notice this, but this time, usually Swiggy and Zomato, even in their quick com business, give a GOV. This time they have given net order value, which is post discounts. So the idea, my understanding is, because I spoke to a couple of analysts, that why did they change, is that because NWGOV is a very misleading metric, because you can't do unit economics on that. NOV is what actually customer is paying. And if you see the NOV difference, there was always a GOV difference of 1.5x, but the NOV difference between Blinkit and Instamart is very high.
Huge.
Huge, right? Two things. One is, I think, the new stores in tier 2 cities, etc., where the NOV is not very high. Second, I think both have reacted to Zepto's discounting a little, though not as much. And I think now privately Zepto is claiming a higher NOV per order than Instamart, but it remains to be seen when they start again doing the fundraise what comes out publicly, because the only numbers that we hear is GMV, right? So if you ask me unit economics wise, I don't know how I know how a negative 2 rupees contribution margin of Blinkit can become plus 7 rupees. That math, as dark stores mature, maybe they'll squeeze a little bit more from brands in terms of margins, more ad revenues, etc. will come in. So your take rate will increase, and your CM path to, let's say, 10 rupees per order seems clear. How a negative 18 rupees of Instamart gets to plus 10 is just going to be very hard for me. Like, I can't underwrite that. So for me, it's a very existential question on the business model itself, that why is everybody losing so much money per order, and still billions of dollars are being poured into this business model, where the only guy who's actually proven the economics is one person, and that too just like 10 rupees per order is very thin margins, right? So it sounds very hard that 7 players will be able to do it.
Yeah. So I think, Revant, what happens is, if one player proves the unit economics, then the entire sector can copy, as long as there is space. This happened in food delivery, right? I mean, Zomato did prove the unit economics before Swiggy, and Swiggy is catching up. That's why I'm seeing the improvement in take rate, the average order value. The average order value of Zomato is far higher than Swiggy in food delivery also, 1.5 times, and for a fairly long period of time, right? And I think now it's similar, correct? If I'm not mistaken, it's
Still
similar.
a little behind, but I think actually very similar.
Very similar, right?
To the
3 साल पहले देखो, when Zomato went IPO, or even a year later, average order value is far higher than Swiggy. So if Blinkit gets it right, there will be a second player who will get it right. I don't know whether there'll be 5 players or 10 players. All right. My point is different. My point is that Zomato is the only player, and in a duopoly, what happens? So there will be a duopoly. There'll not be one player, because I'll tell you, the brands will want another person, the consumers will want another person. So there'll be a duopoly. Okay. There'll be a second guy in the race. Whether the second guy will have a 20% market share or 40% market share, we don't know.
Yeah.
Right.
Difference,
and we don't know who the second.
Deepak, is restaurants ki case mein na, restaurants were already existing. So if I wanted a McDonald's, I wanted an option of service. The difference here, in my view, is it's not just about selling a Unilever or a Reckitt product or a Bombay Shaving Company trimmer through Blinkit or Instamart. It's how you design your dark stores. How do you negotiate your rentals? Like, I'll tell you, the difference in commentary also befuddles me a little. So if you hear the analyst call of Blinkit, it's very conservative. Rentals are going up. We are seeing a very big issue that our operating costs are going up on dark stores. They are very, very pessimistic, almost to the extent that we are expecting much higher burn. So, like, it is what it is, right? But we will still try and win this battle. But if you hear the Swiggy analyst call, it's a little euphoric कि नहीं burn अब खत्म हो गया है, अब आगे सब बढ़िया है करके.
So you're making the same point as I am, right? Swiggy is still in the venture capital mindset, and Zomato is acting like a mature company, which is actually, why does Zerodha, Nitin Kamath, come out and say, hey, every year he says, this is the peak we had, and then he grows 50%. And, like he says, and not him, I have seen every market leading company in India doing that. Every market leading company in India doing that. They are not euphoric. They're very different of the VC mindset. They're saying, no, we will not grow. No, the costs are going up. Why is that narrative important? Because it actually helps your team. It actually helps your cost structure. It helps set the right culture in the organization. If you're euphoric, your team listens to this analyst call, hey, we are doing so well, the burn is coming down, so we can negotiate maybe give an extra 5% on the rentals. We can hire those extra team members. But if you see a Zomato, so that narrative actually goes deep down.
Yeah, very fair.
Not to that, Zomato narrative goes to your vendors as well, suppliers as well, your brands as well. Shantanu goes to Swiggy and say, hey, you guys are doing so well, so give me that extra 5% back which you took last quarter from me.
Interesting point.
And goes to Blinkit and say, Alvinda tells him, we are doing really unwell, not well, and this our cost structure is so high, and then takes 5% more from Shantanu. So that narrative is a very important narrative it's acting like a mature company. And if I tie it back to my point, I think there'll be duopoly. There are duopolies in these big markets. That's why duopolies exist, right? Or your stakeholders want a duopoly. Your investors to your consumers to your vendors to your brands, everyone wants the second guy. The second guy, depends on the execution, will be a 20% or a 40% player. Typically, the second guy will be a 30 to 40% player. Typically, will not be a 20% because 20% will pain the rest of the stakeholders, and they will push the second guy over time to gain market share, right? 30-40%. When second guy is a 30-40% market share and the first guy is a 60-70% market share, the market cap difference is 80-20.
Which is seen today in the businesses. But one aspect, Deepak, sorry, I was just trying to make a slightly nuanced point. Maybe I was not articulate enough. Is that मुझे लगता है the execution on quick commerce is much harder than food delivery because it's not just one variable of कि कितने rider रखने हैं, और because सारे restaurants same है. Everyone knows 80% of orders come from these 200 restaurants in a catchment area. I think understanding the potential demand of what all can be done on quick com is being far better executed by Blinkit, and I don't think it's very easily copyable that way.
कॉपी हो जाएगा रिवान, 1 साल में नहीं होगा, 5 में हो जाएगा, 3 में हो जाएगा, टीम हायर हो जाएगी वो वाली, they'll hire the same
मैं
team.
आपको बताऊं इसमें क्या है कि आप डार्क स्टोर कितना बड़ा लेते हो. फॉर एग्जांपल, आई थिंक अगर आपको एसी बेचना है तो आपको बहुत ही अलग डिजाइन चाहिए डार्क स्टोर का. अब वो किसी ने सोचा नहीं है, बोले अरे यार ब्लिंकिट एसी बेच के पैसा बना रखा, चलो मेरे को भी करना है. बट आई कांट सडनली नाउ गो एंड रीनेगोशिएट एंड से लेट मी टेक अनदर डार्क स्टोर बिकॉज द एवरी capex and getting that dark store to profitability is a very nightmare situation क्योंकि आप उसका payback कर रहे हो and everything comes together. Like the most concerning number for me, by the way, in these was the absolute CM per quarter. Sorry, I don't know why I'm not. So it was almost to the tune of Swiggy's Instamart is losing 22 lakh rupiah per quarter per dark store. Blinkit is making 25 lakh rupiah per dark store per quarter.
I mean, wow.
There's something really wrong with the way the businesses are designed, or something really right that Blinkit has got.
My point, Revant, is I admire Zomato as a company. I admire their execution. And I'm not saying it's easy to copy. I'm saying over a 5-year, there was a similar difference I saw in food delivery. Although you can argue food delivery is easier, etc. But as long as Swiggy continues to raise capital and gets capital, they will over time, rewire the whole thing and copy, right? They are smart people. They will also learn what you are learning, right? As a differences in execution, right? And it won't be easy. It'll be a very painful journey of doing multiple of these QRPs. They will have to raise $1 billion now and more eventually and all of that, right? So, whether it's Swiggy or Zepto or I don't know, whoever it is. But I'm saying the same point. It's going to be a very painful journey for the second guy.
Do you see a nuance of like food is an anti-habit? You can't have the same food every day. But if I see brands, like if I use a trimmer, if I use Shantanu's trimmer, and I really like it, and it's available on Blinkit and not on Instamart, and then that keeps happening, right? Like let's say my favorite supplement is the same thing. And brands by design are more of the same versus food is I need to keep having something new every time. So by design, because food is an anti-habit, I'll want to circulate restaurants and I will always want selection and price. So price, selection, convenience is how a marketplace by design tries to win. There is parity in price, parity in selection, and parity in convenience. So the only delta was who can give me faster. So what is Rohit Kapoor doing? He's saying मैं 10 minute में delivery करूंगा because बाकी दोनों तो same है. Selection same है, price same है, convenience में I will outdo Zomato, and they seem to be inching forward in market share. Let's say on the quick com side, let's say everybody's doing 10-15 minute delivery. So convenience is similar. Then price and selection matters. So Zepto played the price game. For 2 years, they just kept discounting. And now obviously brands are saying, you bear it, we will not. Their burn was high. Now they're cutting it down. I don't know how they'll still grow their GMV when the prices are no longer the best. But I see that game, everyone plays the same game. Flipkart Minutes, when they launch, they're just undercutting and funding discounts because they want the initial pull. But let's take again 5-year out where the price is also similar, because let's say Shantanu will price his trimmer same on everything. Because Amazon will complain कि तुम वहाँ सस्ता क्यों दे रहे हो. Then it's only basis selection. And do you see a potential selection, like if I was Albinder today, I would talk to everybody and say take 5% less margin, but go off Zepto and Instamart. Like agle 5 saal, like that's how I will really technically become absolutely monopolistic if I can get the best selection per se. Do you think something like that?
Fair point. But if I'm Albinder, I don't need to do all that right now because it's not like the second guy is far behind in terms of
Please,
execution.
they're so
right?
far
And
behind that.
आज तो जरूरत ही नहीं है. What I will focus on though is start to think about and seed private labels. Because I have all this data, and that's where the margin of 10 rupees goes to 30, 40, 25, right? I will create another razor, as a private label, right? And I will slowly over the next 5 years get my private label business to be 30% of what I'm doing. All the, that's where the margins will come in, by the way. And because I have so much consumer data, I have an amazing amount of data localized. I exactly know what consumers are ordering at what time of the day, etc., which pin code, which data, not even pin code at a micro lat long level, right? I exactly know what's selling, right? And I have the timestamp data of this. Eventually, human beings are the same and they behave in a similar way, but they have, so I mean, there's a lot of data, going back to my point on correlations, right? There's a lot of data that can be mined to create new products, right? For a lat long which is sensitive on cost, a cost sensitive razor. For a lat long which is sensitive on brand, a brand sensitive razor. For a lat long which is, I think that's where the value of this will get created. So that's the next level of innovation I'll want to see, right? Using a lot of AI, that's the next level of innovation I'll want to see. So that's where AI will come into play, right? Almost, mapping as a continuing from lat long to, what is the product which will be shown to you, which will be stocked, which will be shipped. So that's the next level of, there's a lot of work. So I won't call this to be an easy game. And I think, again, it requires very solid execution. And I would say Blinkit is far ahead in terms of
No, I think that everybody
the
accepts.
market.
I think my only worry is, I think you're right, ki, what is looking like a eventual 55-45 or a 60-40 on food delivery may end up looking like a 70-30 or even a 80-20 on quick commerce. Because
And is that all dependent on how much patience the investor will have, right? Because it all comes down to, again, liquidity and capital allocation. Because how much
yes,
will you need to get?
if you to the $1 billion that went into Zepto last year, अब उसी share price पे अगर वो पैसा raise करता रहेगा, boss, I will start losing patience की मतलब where is the value creation?
But capital enough for everyone. There's so much dry powder in the world. It'll keep continue to get capital, right? I mean, there'll be a second guy who will continue to raise capital. Okay,
And what is scary for me is, DC, is like if that becomes a game now and it is not allocated well, it could become a Ola type situation where it's a cash guzzling business model. You are the number 2 player. Then you are what you're raising at, it keeps decreasing. Then 6 billion value, 3 billion, then electric कर लिया, फिर crude
So Swiggy has raised 4.5 billion. It's valued at 7 billion today. What's the shareholder return? Nothing, right? So
except for the seed and Series A guys, they made a lot of money. They will always
they've made decent money. Okay, they will always make money. Seed and Series A, any $1 billion outcome is a good money, right? But other than that, no one has made money. I don't think even Series B, C would be struggling to kind of meet IRRs. I don't think Naspers is the
largest shareholder there, yeah.
Largest shareholder, right?
They put $1 billion plus of the 4, I think. They themselves have put more, yeah.
And they would have gotten diluted, so I don't know how much. So my point is, if you just take out the metric of shareholder return a bit, then there'll be a second guy. Depends on what execution, 10 years. If you 10 that's what I'm saying. There's a very high, मेरे को बहुत गाली पड़ी थी LinkedIn पे मैंने डाला था कि Zomato will be India's first $1 trillion company. My math is very simple. Yeah. There'll be today the largest company is what, $200-300 billion in India. In 10 years, the math shows if you compound nominally, the largest 3 companies will be $1 trillion, 100%. Would there be a consumer tech company in that bracket? Very high likelihood. It's happened everywhere in the world. Which company is Zomato? So the probability of Zomato being $1 trillion company, in my view, is very high. Would it not have a $200 billion GMV? Would it not have a $10 to $20 billion of EBITDA? Seems logical. Would it not have a, at that scale when it's growing negative cash flow with high ROCE? Would it not have a 40, 50, 60 multiple it will have? So to me, it's a plausibility. Now, $1 trillion can be 500 billion or 700. It will be a very large outcome from where we are today, the probability is very high. So it's a good trade in my view. It's very simple. It's a very good trade in my view.
What's your
Even
view
at
on
a 20.
Flipkart? What's your view on Flipkart again? Like, like we're looking at an IPO this year. Good outcome for Walmart, but still 40 million. That's a number, no? 40 million burn a month.
Shantanu, I have a question mark as to when I started hearing that they want to go for an IPO. I'm like, 2018 to 24, Walmart kept buying out everybody, saying, I want to buy you out. I want to own most of Flipkart. Now they are saying, please domicile in India and you list yourself. Clearly seems that, why would anyone do that? I'm just reading between the lines there, right? Ki boss, even for them, it's capital allocation, right? Why, if they are saying, ab tum khud raise kar lo, that means they don't want to allocate more capital. I'm reading that as that I don't think it's gone as per what they anticipated.
Still 40 million burn a month or something. Something like that, no?
The fundamental math, Revant, between e-commerce and quick commerce, which one is better fundamentally at a first principle level?
For whom? For the company. Company is doing
for the company, of course. The fundamental math, the fundamental unit economics.
E-commerce is much better because your cost of servicing is something that you can manage. Expectation agar 10 minute nahi hai, so you can optimize a lot on the cost of servicing. At least that's my view.
That's, I always wonder if it is the case, because see, the logistics ecosystem is more or less the same. Okay, in fact, I would argue for quick commerce, the logistics ecosystem can be cheaper.
It's close by.
Till
So
the last mile.
Milk run hai, last go. Jaise hum bhi abhi
Till the last mile. The logistics ecosystem from the brand to your dark stores, because you're storing and all of that, right? Of course, it should be the same, if not cheaper than this.
No, it is cheaper. I can guarantee you it is cheaper. It's actually cheaper.
Okay. Then, if you have that data, that localized lat-long data, and you're so close to the customer and customer service, you'll be able to, how much difference are the 10-minute versus a...
Actually, इसमें ना slight problem ये है दीपक कि अगर हम थोड़े rationally grow करते ना, अगर if this was created over 10 years, then people would have figured out a lowest place. Like, look, see, we were a QSR business at Rebel and we pivoted to dark kitchens, right? So we were the first ones to discover that model. We used to get kitchens at 20,000 rupees rent. So अगर मेरा kitchen 5 lakh भी करता ना, तो मेरे लिए rent to revenue ratio was becoming eligible. Now obviously the kitchens do 40 lakhs, 50 lakhs, right? आप सोचो, but 20,000 rental नहीं रहा है अभी. Rental has become itself 2 lakh फिर से. क्योंकि people realize ना, see, in fact the best investment in India I keep thinking is commercial real estate, because वो सूंघ लेते हैं कि कहाँ पैसा बन रहा है करके, and then the rents go up, right? So my view is what is happening is Quickcom today is still a very metro and tier 1 city phenomenon, where getting dark stores in Gurgaon Golf Course Road actually Gurgaon will still be okay as enough land. Bombay mein, it's like crazy. Even Bangalore is not that cheap, right? So
but even Amazon is having those delivery centers, no? DCs.
बहुत बाहर रखते हैं वो. So P1D, for example, which is just outside Thane district, services most of West e-com, right? It's like an entire. So we have our own warehouse there, 30 rupees per square feet, right? We have like 40-50,000 square feet, और सब कुछ वहाँ से service होता है. So there is a optionality for you. Like I have my office in Thane, right? So I can at least think कि यार ये optionality है मेरे पास, and let me figure out like go back to your first.
एक और क्वेश्चन पूछता हूँ. Is quick commerce cheaper than किराना स्टोर? किराना स्टोर तो सिटीज में है, सब जगह है. रेंटल ही अगर बिग डिटरमिनेंट है,
क्या ओवरहेड की प्रॉब्लम
नहीं, वो तो देखो Revant will get solved, right, in 10 years. I'm not worried about today. I'm thinking about 10 years.
At a per store level, definitely.
कि किराना अगर by design अगर किराना profitable है, but if I have actually spoken to a couple of kirana guys, right? They make 30 to 50,000 rupees. Best ones will make like 1 lakh net profit, right? So, but if I just give you the dark store CM that I gave you, right? Like Blinkit is making 8-9 lakhs per dark store, and they have to because it's a much larger space. They would have like 3,000-4,000 square feet as such. So, but fair point. अगर किराना profitable है तो ये भी by design overhead will get solved हो जाना चाहिए. तो fair point actually.
हो जाएगा ना थोड़ा. आप तो कह रहे बड़ी जगह है. It doesn't have to be road facing. It can be a little in the back, right? Plus आपका delivery cost कितना ही, it can, and you have a leverage of food delivery also if you match it well, right?
Logistics हो जाएगा. मेरा view में Quickcom में वही हो रहा है. Dark store economics में जो capex plus rental, all of these things, if negotiated well, and that's where I really believe it's still an execution game. Like किराना जो है वो लाला है ना, वो मतलब वो तो पाई गिन के करेगा वो. Whereas if
तो
you're
ये लोग भी कर लेंगे ना 10 साल में मैं तो
करना पड़ेगा, okay. That's where the answer is.
मॉडल
Yeah.
अभी ना एग्जीक्यूशन छोड़ दो, अभी तो फंडामेंटल मॉडल देखो, अगर किराना से
Yeah.
चीपर है तो क्विक कॉमर्स तो बहुत बड़ा मार्केट है ना। तो ई कॉमर्स तो फ्लिपकार्ट, व्हाई वी why Flipkart? And if that is the case, then Blinkit will be the largest company in India. There's no doubt.
Yeah. That's why Flipkart
आप
is
e-commerce से भी सस्ता बोल रहे हो। प्लस द ब्यूटी इज ह्यूमन बींग्स आर नॉट डिसाइडिंग कि मेरे को क्या इन्वेंट्री रखनी है। द एल्गोरिदम विल बी डिसाइडिंग एंड एल्गोरिदम विल नॉट मेक लेस मिस्टेक्स। Then the buying power for a kirana store with then you are taking this whole chain away of distributors, wholesalers, and all. You're directly dealing with the brands. Your negotiating power is very high. You are also producing your own stuff. In the staples, 30%, 40% of your book is self-produced, and Zomato knows how to create brands. They have there's a customer love
Hyperpure is a
with
big
all the
that you're
offering.
saying.
Right, there's a consumer love for the brand, so Zomato will create. I mean, Zomato tomorrow creates a daily shaving company, and like a Zomato shaving company, let's say. But Shantanu will be a little worried, right? That like they have a brand love, and
it won't happen. He will first sell to Zomato.
won't.
He'll call it a daily shaving company. Shantanu, I know Shantanu very well. He's like, आप रुको यार, बनाना क्यों है?
Retailers creating brand is a separate podcast. But no, very, very interesting. Very, very interesting. I always fundamentally believe, like, if I, like, I look at myself, whenever I question business models, etc., I come back and look at myself as a consumer. And I order from all three indiscriminately. I have zero loyalty to Blinkit, Instamart, or Zepto as a consumer. The way I've now started doing things, if I have a cart in mind, मेरे को 8 चीजें order करनी है, I think what are the two most rare, or olive हो गया, या फिर कुछ, shoes for my dog because it is very hot outside. There are some things that I know कि यार इसमें थोड़ा availability का fight हो सकता है. So I search for that thing on all three. Where it is available, I fill up my cart and I order.
God.
There is no loyalty. So for me, it becomes that. I'm assuming everyone has figured out their own consumer level approach to these three. But at a fundamental level, I agree with Deepak. Like, if there is no real difference across all, then it might actually come down to brand. That will probably come down to actually come down to brand and what you feel about their company beyond just.
Shantanu, you are still a very discerning guy, right? आज भी brand होगा. A lot of people just go with brand.
और उस ब्रांड में नहीं मिला आपको 3 बार आपको दूध नहीं मिला
Skip to the second one. It's like I want Colgate का toothpaste नहीं है तो I'll buy Close Up. वो नहीं है Pepsodent. Like there is a pecking order. Similar to you feel like having a biryani, you'll first have one brand in mind. Then वो नहीं बहुत time लग रहा है, you'll go to the second brand कि चलो ये खा लेते हैं आज. But I think that's a fair point. And that's why brands are not winner take all. There's always a second or a third or a fourth per se. But yeah, considering the economic problem here where the amount of capital that will go in, there will be a duopoly per se. And fair point on the Flipkart piece also, Deepak, which is why they have reacted. They know they need to play. Otherwise, it's an existential risk in 10 years for FK. But what's concerning is reading a news report where they're going to go slow on rolling out dark stores compared to what they said a quarter back because the burn is so high that the board has said, boss, slow down, karo itna. That what worries me is, everyone lambasted Dipinder for saying QuickCom is burning 5,000 crores. But if I see the result, it proves that. Relatively, everybody's burned 5,000 crores in the last quarter.
This is where real test of metal happens, right? So Big Basket, for example, has been poo-pooing quick commerce for the first 2 years of quick commerce. After that, tried to get onto the bandwagon. हुआ नहीं उनसे.
Imagine as a shareholder, if you believe this, as a shareholder of Zomato, you will eventually get the benefit of this 5,000 crores because all that capital is going to creating the market. And who's the winner? Who's taking on 80% of the returns of this? I mean, probabilistically, you never know what's going to be the future, but probabilistically, the shareholder of Eternal is benefiting from that 5,000 crores. So if 5,000 crores keep getting invested over the next 10, 20, 30 quarters, imagine 30, 40, 50 billion dollars going into a segment to create give benefit of to one company, basically.
Yeah.
I mean,
इतना hard work क्यों कर?
Going back to the
beginning of the discussion, we should just buy Bitcoin ना. मतलब बहुत मेहनत कर रहे हैं हम लोग. Loss of capital raise मिल ही रहा है इंडिया में अगर. So please help us figure out a way, Deepak, that we can buy Bitcoin so that at least वो value creation becomes so easy.
अबे ये पक्का Dipinder सुन रहा होगा तो Bitcoin वो Blinkit पे list करा देगा.
When you actually start investing in Bitcoin, by the way, your return threshold actually increases, by the way, for people, right?
That's a good point.
Someone said, Fidelity, or someone said yesterday, Fidelity team said, you should think of your return in Bitcoin terms, or Like, so if Bitcoin is giving a CAGR, it's giving a CAGR of 50 to 60% every year. Okay, that's a CAGR. It used to be higher. Now it's at 50, 60%. Eventually, people are projecting it over a 20-year period. It'll give a 30% CAGR. Very few companies can beat that IRR, right? Probably Tesla, probably AI companies can do it. Probably, if Zomato is a $1 trillion company, Zomato's IRR will be 35-40%. Zomato will be able to do it, or match it, right? So there are only a few companies in a country at scale, and at scale, by the way. Small companies, of course, keep giving 30, 40, 50% IRR, but a larger pool of capital returning 30, 40% is very hard.
One thing of this discussion today, usually I come away inspired with different things, but thank you for one thing, Deepak, that it's been 5 years and, I was putting on the next 5-year plan and it was between 30 and 40%, and I'm now realizing बहुत छोटा सोच रहा हूँ मैं. It's much bigger, यार. मतलब, नहीं, seriously, it's very eye-opening as to how much potential is there, and any plan we make today is on such limited information. And as everyone says, right, the bigger your dream, you will find a way to expand your thought and to actually achieve that, right? मतलब ड्रीम छोटा रख के या मीडियम साइज रख के भी कोई पॉइंट नहीं है. So one thing at
I
least
think Revant for you, the one thing I think about the way you're hyper skilled in your categories and your brands now, and I think it might be a great thing that sometimes your categories are becoming competitive in what Deepak said, and maybe everyone else is just building your market. Like eventually, in your case, because it's such a habitual wellness and health is such a habitual category, everyone else will create the market, and you will take it if you win the way you've been winning for the last 5 years, and maybe the outcome might be much bigger than what day-to-day execution might.
In general, there is a sentiment in the world, right, that as AI will bring more abundance and people are getting richer, they will invest in health, and health tech is a segment which will explode, and it is exploding, right? All these longevity and anti-aging and just nutrition and health and all that, right? So yeah, India is still starting out, so it's a huge play.
Yeah. No, I think that plus, but we need to still innovate and be ambitious on pushing the boundaries of how to think about execution. It cannot be more of the same. I think shareholder returns start becoming like a normal 15-20% when you are just doing more of the same and you're bringing in some efficiency here or there. But if you want to actually cross a 40% CAGR over 10 years, then you need to keep pushing the boundaries on what next. And I think that is very, very, very critical. And see, one of the dichotomies, I don't know if you face that at Revigo, Deepak, but and I keep asking Shantanu about this because it's been 9 years for him. I have a grouse that, and I've heard Dipinder say this post IPO, people relaxed and stuff, right? Like, if you want to get to that scale and that compounding, you need to keep pushing the boundaries, and you need a team that's hungry enough and ambitious enough to go with you there, right? How do you keep that hunger long enough? How do you keep cycling through maybe teams which will continue to have that sort of hunger and ambition is a big question for us to answer as we hit 4 years, 5 years, 6 years, 8 years. I know companies that stop innovating after 10 years. And we question कि यार क्यों रुक गए? इतना बढ़िया balance sheet है, इतना बढ़िया धंधा है, अब यहाँ से और करो करके. But I think it's a question of when does the founder get tired? Which in my case is zero because I've started lifting weights now. So I'm like, nahi, I'm बहुत प्रदर्शन तो करना है करके ये. But yeah, it's a question of how do you get the teams to also rally behind that, especially people who have been and seen the first 50x. That's like,
yeah. So team cycling is very important. Look at what Deepinder does every few years. Just changes the entire team and is very unapologetic about it. क्या बोलता है, हंगर खत्म हो गया था उसका. He was just relaxed. उसने Lamborghini खरीद ली थी, हंगर खत्म हो गया था. So like
we were aping him only. He buys Porsches and Lamborghinis every 6 months. So लोगों को लगा यही.
Yeah. No. He says कि उसका हंगर खत्म नहीं हो रहा है, but he does it. Now, if you see all these guys, right, who are continuing to compound and innovate, they have a certain 10-year, 20-year vision, right? And the goalpost is really high. So they're always very tiny compared to that vision. So hunger खत्म नहीं होती है. अब team में there will only be 10% people who will be with you in that 10-year, 20-year thing, right? जो अच्छे होंगे वो खुद founder बन जाएंगे, right? And who will have that understanding of that vision and hunger and drive and all of that, right? लेकिन 10% होंगे जो रहेंगे, वो नहीं बनना है, but यहीं पे enough motivation है, incentives aligned है and all that. But 90% of the team will keep cycling. as a top team, I'm saying.
Yeah. An
And
important
there'll be
diversity.
4 or 5 year cycle. How do you cycle that team is going
Yeah.
to be very important.
Yeah. No, very, very
Without
provoking. At least you really helped open my mind to a lot of potential areas. One, personally, जो थोड़ा बहुत पैसा है मैं सतोशी फंड में रिक्वेस्ट करूंगा आप really.
Santoshi.
And second, I think I really need to at least reset my mind itself a little. Like, I think we also are limited by our own thoughts per se. At least this was very helpful to. I mean, I'm sure the team won't be happy because I'll come and say, "नहीं यार बहुत कम grow कर रहे हैं. Let's do more." but this is
Anyway,
very helpful, yeah. Very helpful.
because when you look back, na, Revant, like, I agree with Deepak. Like when you look back, I love his macro view. Okay, 2035 mein, what is the top consumer tech? Like what top 3 companies in India will be consumer tech? It might be likely that it's none of the companies that are there in one that will be founded in the next 10 years. It could be very much something else like that. But if I were to think about like 3 years back also, like would I have imagined a warehouse that does like 2 million shipments a month, for example? मेरी फट जाती है यार सोचने में. आज मेरी फटती है सोचने की 5 million shipments a month. करना पड़ेगा ना वो. Like if you have to get to, like you have to start thinking, as if it is already there, even like prior to the
Yeah.
fact. And I think that's the only way
Or-
that hunger is fed.
No, and Shantanu, उसमें ना मेरा एक फंडा है, थोड़ा कॉन्सेप्ट है पुश वर्सेस पुल. That vision should pull you. That 2035 should pull you. Right? Not like you say a team grow करना है बहुत, वो push है. You know, push is mechanical. Pull is electromagnetic. You know, there's a difference. Mechanical में wear and tear होता है, gears घिसते हैं, तो लोग थकते हैं. Electromagnetic में energy आती है, ऊर्जा आती है. You know, like, you know, things happen magically. That's a magical force of the universe, right? So pull versus push. So if you have a vision and if you can inspire your team to have that electromagnetic energy and be pulled by that vision versus you're pushing them to grow, those are very two different things, right? And yeah, how you're able to do that will determine. And not
Yeah.
everyone will get pulled, not everyone will inspire, not everyone has that base foundation for that electromagnetic this thing. Some people will get pushed. So how do you cycle your team in such a way that your top team has more of electromagnetic energy, your bottom team has, you know, like more of, they will always have more mechanical, right? More will be driven by, you know, the next few months and few quarters and all of that.
Outstanding, sir. Thanks a lot for spending this time. Really appreciate you doing this